Hey guys, so I hope everybody is staying safe. I just wanted to do a very quick video dealing with federally backed mortgages during the coronavirus pandemic and what the policies are right now for anybody with an FHA, Fannie Mae, Freddie Mac, VA loan. I feel like there's a lot of misinformation out there or wires being crossed where people don't quite understand what their options are or what the options are for people with those kinds of mortgages. Maybe breeding some sort of discontent between homeowners and renters. And I just really wanted to address from my own research and calling local state senators, HUD even, from my conversations with them, what the current policies are, because I think Governor Cuomo did a bit of a disservice to a lot of people when he said that mortgage payments were going to be suspended and put on the back end. That's not what's happening, at least not for FHA, Fannie Mae, Freddie Mac, VA, federally backed loans, which comprise 70% of all loans across the country. So especially for a state like New York, which has been heavily hit by this pandemic, this information I think is pretty important. Yes, there is a suspension for up to 180 days now. That is the policy, at least for the FHA backed loans, where you can not pay your mortgage for 180 days. Which sounds great in theory, but I think the most important part of what the policies are right now is what happens at the end of all that. So you, as of right now, you can take 180 days off and they won't negatively report that to your credit, which I think most people know that if you miss a mortgage payment and keep missing them and the bank reports it, it can be a pretty heavy hit to your credit, which can affect so many aspects of your life, from auto loans, refinance rates, purchasing a second home, those rates as well. So one of the most important things to think about is what happens at the end of those 180 days. You have 180 days now, and then at the end of those days, they will reevaluate and give you basically three options. Four, technically, because if your state, your financial state hasn't improved and you need more time and you show need, they can give you another 180 days. So basically about 12 months. Right now, 6 months is guaranteed to anybody who asks for relief, and then possibly another 6 months after that. But then, let's say at that 6 months you are back to work and you're doing fine, you're going to have three options, and the same thing at the end of the 180 days. As of right now, today, April 27th, these are the policies. Policy number one is you pay back your whole past due balance. So for me, I carry a $3,900 mortgage here for a two-family home. I Airbnb my upstairs floor, so obviously that makes things a little even worse for me because I'm not making any money. Nobody's coming here, nobody's staying here. But I carry a $3,900 mortgage, so for me, at the end of 6 months, I would have around $23,400 to pay. That's obviously not a great option, because unless you have that money in savings, and they do say one of the first things you hear when you buy a home is to have 6 months worth of bills and mortgage payments in the bank. And obviously, if you follow that, that's great. You can pay that, but then you are basically at the end of this whole pandemic left with nothing, going back to a job where you're making the same amount of money. It's not like you're going back to make more money. Maybe some people will, but I think the vast majority of people will not be making more money. You're not going to be getting advances on your paychecks. So you're going to be back at square one and you've lost all your life savings. So that's not necessarily a great option. The other option is a payment plan that you and your servicer can talk about, and it'll be maybe 3 to 6 months to a year. So let's say my servicer gave me 6 months to pay back the past due balance. That would basically increase my monthly mortgage by $3,900. So double it, because I would have to pay it back within 6 months. So my mortgage would be $7,800. Also not doable. I'm not going back and making more money than I was when this whole thing started. The last option, which I think is kind of the most confusing option, and in talking to a pretty good representative at my servicer, he was telling me that it's also not completely ironed out. It's going to be a balloon payment. Now, what that means is they're kind of misconstruing it, and they're misrepresenting it as if those payments are going on the back end. They're not quite going on they are on the back end, but it's not the same as what Governor Cuomo in New York called for. What it's going to be is they're going to take your past due balance, whatever it may be, give it to a separate government agency or whatever agency is going to be handling these balloon payments, and it's going to be a second mortgage on your home, a lien on your home. Now, the details aren't completely ironed out yet. They don't really know if, for example, that may sound good in theory, but when you start thinking about the rest of your life and being a homeowner, it might not be the best option for a few reasons. The terms of the lien and this second mortgage will come into play and be very important, because what if you want to go and refinance? And you are somebody who did a federally backed loan, you put less than 20% down, you've been working to getting to 20%, you want to refinance to get rid of your private mortgage insurance, your PMI, which can be ridiculous. For me, it's a little over $300. It doesn't do me any good. I can't wait to get rid of it once I accrue 20% of my home. That second mortgage might come knocking and say, you have to pay us first. So that's that much longer that you have to wait to refinance or for your home value to appraise higher, the market in your area to go up, before you can actually have lower payments. This balloon payment could possibly just come due when you either sell the house or you pay off your first mortgage. And then at that point, you'd be responsible for the full final balance. So again, in a selling situation, that's probably okay, because you have to factor in, okay, in my situation, I'm going to come out of the selling of my home with $24,000 less. Okay, it's something to think about years down the road. But if they want that money sooner, and there's some sort of conditions where you can't refinance without paying them back first, you can't do a cash out refinance, which is a way that a lot of people come up with renovation costs. Let's say your home is hit by a flood. I live in an area that was affected by Sandy pretty significantly. So if I needed to pull out some money for renovations because my home was damaged, and then the second lien comes knocking and they want their money, that's really going to suck for me, because what about my house? How am I going to take care of my house? And I know there's insurances and there's a lot of other things, but what about medical expenses, right? I mean, that's another, especially during this time period, I feel like it's making a lot of people think about what kind of health insurance they have, what their health insurance covers. What if you have an emergency medical expense? And a lot of people do cash out refinances or HELOCs or any of those kind of products to get money out of their home. But if the second lien is just constantly bearing over you and waiting to get paid, it's not exactly putting the payments on the back end. So until that is ironed out, I don't even know if I would recommend going that route, because you'll constantly have this second mortgage, second lien on your home that will affect anything else you want to do with your home, whether it's refinance, HELOC, cash out refi, any of the many things that a lot of Americans use to try to get ahead in life, or just to try to keep up when they have unforeseen expenses. Now, with 70% of mortgages across the US being FHA or federally backed loans, this is a pretty serious and important situation, and I'm not sure why enough people aren't kind of putting the pressure on representatives to figure out what's going on, what the policies are going to be, what kind of steps are being taken. I know I've been calling anybody and everybody that I can, and I spoke to somebody at HUD at length, and she was great, but by that same token, she was telling me, they read one page and then they send them another page with policy changes, and they can't even keep up in these offices. And I think Ilhan Omar has a piece of legislation that she wants to pass that would deal with even, I think, forgiving mortgages, which I'm not entirely sure that that's the solution to this problem. In an ideal world, it'd be great if during this time period when none of us can get ahead, none of us can make money, people are struggling to get unemployment claims through, which I would bet that a lot of people with federally backed mortgages, people who put less than 20% down on a home, they're struggling right now and they're not making enough money to pay for their mortgages. And forgiving the mortgages, I think, would be great, but I'm not sure if it's possible. What would be great is if what Governor Cuomo said could actually be put into place on a federal level, which is truly putting payments on the back end and just maturing the loan an extra year or a year later kind of thing. And I know you could say like, well, that's the same as the balloon payment. Well, it's not, because if you just know you have an extra year to pay your mortgage payments And that's that 1 year, that 6 month period, the interest isn't accruing. There's no kind of condition where you have to pay it back if you refinance or sell your home it's a balance there at the end, but it's not quite as overbearing where it needs to be paid first. If somebody could figure that out or pass that kind of legislation, I feel like that would solve a lot of problems. And I just firmly believe that you have to make noise. I know to get to this point where I was able to talk to somebody high up enough at my servicer, I was making noise on Twitter, and I don't even have that many followers on Twitter. And I was called by somebody on a Sunday night at like 8 p.m. being like, could you please just, give us some time? Could you stop what you're doing? And, no, because there isn't enough time. We need to figure this stuff out now so that you're not paying your mortgage, assuming that payments are going to be placed on the back end until you get the paperwork and the fine print, and you're like, oh shit, this isn't what I expected it to be. We need to know now all these details. We need to know now what we're getting ourselves roped into. So I just encourage everyone to pressure any kind of local representatives, your congressmen and women, senators, just make this an issue, because personally I believe that we should have maybe started with housing. If these congressmen and women and senators are to expect that we should have enough money in reserves to pay our mortgages, why are we bailing out airline industries? Why aren't they liquid enough? Why do they need a bailout? Why don't they have enough money in reserves to deal with a 6-month crisis or a year crisis? Why are we the ones who have to bear the brunt of this? So make the noise, be heard. If you have any questions, write a comment down below. I will respond to everybody. If you have any questions about your own personal situation, you're confused about what your bank is telling you, talk to me, send me an email, do whatever you want. Like this video, share the video, subscribe to the channel so I can keep doing this stuff. I know that's kind of a shameless self-promotion. Like my partner and I were trying to do kind of like a easier going channel. We just did a review video about a cocktail maker that just takes pods like a Keurig and makes you cocktails, which has been great during this quarantine period. So if you're looking to do something easy like that, check that out. Get one. They're actually the cheapest that they've been. But I know money's tight, so it's not even that. It's just like, if you want something fun, do it. If you don't. No one's the wiser. The other videos that we're doing are kind of home-based videos. Like, we bought our home for $7,000 here in New York City. So I think that's, something that a lot of people can actually accomplish, and we want to help people get there. And I feel like after this pandemic is over, with rates dropping the way that they are, if you're in a good financial situation, if you're in a good credit situation, you can actually really make out pretty well if you plan accordingly. But for me, I'm just surprised that we didn't start with the housing issue, because I was talking to one of my state senator representatives assistants, and her and I were speaking about how I personally believe that if people knew that they didn't have a mortgage payment to worry about, and there was something figured out that was good and didn't affect anybody's credit, or there was no balloon payment at the end, but it was just like truly putting payments on a back end, and just maybe making the loan mature a year later, if that kind of peace of mind was out there, I would invest in my local businesses. I would invest in the local restaurant that I love, the local brewery that I love. But I have to think about my mortgage. I mean, as much as I love those restaurants and bars and stores, it's really hard for me to rationalize spending any kind of money. And then especially if we come out of this and I have to take the payment plan, because the balloon option that the federal government is offering now in their policies is just terrible for my future, my financial future. I'm not going to have the money to stimulate the economy and reinvest in the economy and make things better. And I feel like that's going to be a lot of Americans. I mean, we could be in another financial, housing crisis. I don't know, the extent of it, but I feel like anybody with federally backed loans, I was reading an article the other day where it's the new kind of 2008 financial crisis, because it's crazy how people can qualify for mortgages with less than 20% down. So let's say as low as 3.5% down. The mortgages are much more expensive monthly than a conventional mortgage, just because of the fact that you're also paying private mortgage insurance, which can range from, I'm assuming just under $100 to a couple $100, like in my situation. And then I know before this pandemic was starting, I was trying to refinance, and it's even harder to refinance because your debt to income ratio, the debt you carry versus the income you make, the requirements for a conventional loan, which would be a cheaper monthly mortgage payment, are more strict and higher than for an FHA. So to get a loan that is more every month, where you pay for insurance that covers the loan, not you, you can have more debt to your name and qualify than for a conventional loan that can be $300, $400, $500 cheaper, possibly with a better rate. You can't qualify for that under the same guidelines. I do not understand how that's a thing. You would think that somebody who needs the assistance, who is trying to buy a home for 3.5% down, they would benefit from a cheaper mortgage that they could kind of maintain, or at least on par with a conventional mortgage. But that's just not how it works. So again, if you have any questions, if you're struggling, if you don't know what's going on with mortgages, or you're confused about something your bank said, because I did one other point when I was talking to this person in the home assistance department of my servicer. He was telling me that he talked to a couple of his friends who also work for other banks, and that there's a lot of banks who are using forbearance and deferment interchangeably, which those two things are not the same. And he said that he thinks it's not okay, but that's just how banks are doing it. And we need to get to the bottom of this. We need to get to the bottom of this before this pandemic is over. We need to know what we're getting into before all this is over. We need to make enough noise and bring enough attention to this so that congressmen and women, senators, they get on board with this. We need to stop worrying about bailing out the airline industry and start worrying about housing in America, those who own homes, those who rent from us who own homes. And I feel like if there could be some program in place that even forgave loans or forgave mortgage payments, or truly put payments on the back end, any landlord or person who owns a home that has more than one unit, to partake in the program, you have to commit to not taking rent from your tenants. That just goes without saying. And if that were the case, I feel like a lot of people would be better off right now, especially in New York City. So again, if you have any questions, comment, like, share, subscribe, talk to me, send me an email, do whatever it is that you need to do. If you have any questions, I understand how scary it could be. It took me weeks to get through to a lot of people, to talk to people, to get some of this information. I have even more information if there's anything that I touched on in this video that you would want me to talk about more. Comment, let me know. I will gladly do it. I spent hours upon hours on the phone and days upon days during this quarantine period trying to talk to as many intelligent and well-informed people as I could to try to get things explained to me in a way that actually makes sense, that there's no, flowery language that's covering up the dirty details of what's in store for people with federally backed mortgages who can't afford to pay their mortgage right now. So stay safe. Let me know what you think. This was supposed to be a quick video, but it got a little long. So yeah, let me know, and good luck. I hope we all come out of this on the other side a hell of a lot better than when this all started. So